Good evening and blessings out there, everybody. It's your man, Rod Hickman, Generational Wealth Builders, where poverty ends with us. Listen, wanted to get on for a few minutes. Really had something on my heart that I really wanted to share. First of all, working with a lot of clients, and as we begin to talk with clients, what I like to do is bring you the consensus of things that are being shared when we talk with clients, right? Because again, as they're getting ready to, or as they're in the process of changing their financial strategy, a lot of them have questions. And so, with these questions, I love to make sure that people are informed, that people are educated, that they're making the absolute right decision for their family, right? That's what I want to make sure happens. For us here at Generational Wealth Builders, it's mission over commission, right? We want to make sure that families are comfortable, that families can understand exactly what it is that they're getting into. So, tonight, we're going to be talking about the pros and cons of employer-based life insurance. Why? Because when I talk to families, a lot of the times people say, well, I have insurance on the job. And listen, I commend you for that. Anytime you're protected, I commend people for that. But we're going to talk a little bit about that because what I don't want to happen is, or for people to think, oh, well, I have all my eggs in one basket, right? Because that's how people get messed up. So listen, like, share, because this is going to be a great video tonight to help you and your friends. Now, the pros and cons, I titled it that for a reason, because anytime you're going to make a decision about doing something, you need to weigh the pros and the cons, right? You need to understand, why am I doing this? Why should I not do this? What is going to be the downside? What is going to be the upside to me making a decision either way that it goes, right? So I love making sure that people understand that. So let's get started. What are the pros about having a employer-based life insurance policy? The first pro, everybody can tell you, it is the price, right? You gonna get it for the low. And why is that? Because more often than not, it is a group life insurance policy. And simply what that means is, because everybody in the company is under that policy, they're able to give you a much better rate that pretty much I ain't gonna be able to touch 100%. Now, that's the pro behind it. But let's think about this. What other pros are with having a personal life insurance policy? Now, if all you are looking for is death insurance, right? If that's all you're looking for, meaning that it only pays out when you pass, then, hey, that may be the policy for you. But I'm going to show you some other questions that you should ask when you're thinking about this. And again, as October is on the way, it's almost time for open enrollment. I want you to be able to speak competently when you're going and talking to people about life insurance and making sure that your family is protected. So let's first of all talk about the reason why we have life insurance. We have life insurance to make sure that, God forbid, if something should happen, my family is taken care of, right? If something should happen to me as an income earner, I am able to be able to leave money behind to make sure that my family is taken care of, to make sure that our estate continues to go on, to make sure I can leave money behind for the church, to make sure that I can leave behind for whatever charity it may be. You are able to leave money behind when it comes to life insurance, right? So first thing first, life insurance indemnifies, meaning it basically makes whole in the case of a loss. Now, here we go again. When I talk to a lot of people and they're like, well, I got $25,000, I got $50,000, I got $100,000. Let me help you understand something, fam. You're worth way more than $100,000. Let's just put that out there right now. You are worth way more than $100,000. You're worth way more than $25,000, than $50,000. You're worth way more than that to your family. You're precious. You're priceless, right? But again, let us not cheat you and let us not cheat your loved ones as it go on. Now, let's go back to it. So the group or the employer life insurance, again, great price. But what other benefit does it have other than having great price? Can you use it while you're still alive? Nope. Does it have cash value? So it's not liquid at all. What about if you get sick? No. It's just death insurance. What about when you retire? Can you take that policy with you for $8, $9, $10? No. So it's not transferable. It's not portable, meaning you can't take it with you when you leave. Now, again, there are some companies, I think soldiers, you're able to get that VGLA once you retire. So there are very few policies out there that once you leave your job, you can take that insurance with you and keep that same rate, right? 99% of everybody else, that insurance policy is not going to transfer with you. And if it does, guess what? It's not going to be for what you were paying beforehand. Trust me. And then what's going to happen is that now, if you retire at age 65 or whatever the case may be, and now you want to get some life insurance, now your bill is going to be sky high. I'm just telling you, that's the truth. Why? Because you're more at risk now. So let's talk a little bit about the pros and cons. And again, as we already talked about, and again, if you know a reason, please put it in the chat. I love to have that conversation. I adore having feedback. So the one benefit that we have is cost, right? Cost. That's the only benefit that we have so far. Now, let's talk about some of the cons to it. So I already started talking about it. First of all, you don't control that policy. Whatever is in that policy has already been negotiated by the company. They're just giving it to you, right? So you don't have any control over that policy. First thing first, right? That's the first thing. Now, you may say, well, why is that important? It is important because every family is not the same. Every family is different. So every family has different needs, and you need to make sure that your needs are being met. So that's the first thing. It's the lack of control. You don't own it. And then that takes us into the fact that you can't customize your policy. What do I mean by that? What if you say, hey, I do a little dangerous job and I want to make sure that I got a little something extra? Can you customize that? Can you say, I want a permanent policy and I want a term policy rider to make sure that my house is paid for. And so if anything happens to me, boom, my house is paid for and my family now just has the rest of the money from the permanent policy. Can your policy do that? You can't do that with no work policy. So you can't customize it to meet your needs. As I already told you, you can't take that policy with you for the same cost that you're paying for it at the company, right? What's going to happen is if you try to get that policy, once you retire, you out here what I like to call in these mean streets. And that's when you're going to see that they ain't playing out here in these mean streets. They're going to come for your pockets, man. They're going to pop them. I'm telling you, that's what's going to happen. You have limited coverage. Now, with your employer-based job, they normally say that you can get maybe 3 times your annual salary, right? So if you're making $30,000 a year, $90,000. They may be nice and go up to 5. That's $150,000. But I just told you now, you're worth more than $100,000. And so this is what we do here at Generational Wealth Builders. We show our family members how to know how much life insurance you need. And how do we do that? We use what's called the dime model. And that's just not specific to us. That's what we use across the industry. Debt. How much debt do you have? Because what most people don't know is that your debt, they can come after it and hold up your estate because of the debt that you have. Come on here, somebody. See, y'all get mad at the insurance company like they ain't paying out. No. What happens is if you got them payday loans and all that other stuff, them hospital bills and stuff, they can lay hold to your money and tie it up in probate. Yes, they can. And so you've got to know that. So this is why we make sure that our clients have enough to project how much debt they just may have, right? So that's what the D stands for. I, income replacement. How much money do you want to leave behind for your family? Now, let's just look at this. When we sit down with the client, and sometimes this is a hard question, and it shouldn't be, right? But sometimes because people don't know, and when people don't know, they don't know how to respond. But we say, listen, the I stands for income replacement. That literally means that you get to pick how many years of your salary that you want to leave behind for your family. So let's just say, if you make, let's just say $30,000 a year, you have the option to say, I want to leave behind 10 years of my salary for my family. I want to leave my family just in my income replacement, $300,000. What does that do? Remember, especially if you're in a 2-budget home, right? What that says is, that says to that loved one, you can still take care of the household with this money right here. As if I'm still here, if I'm still contributing, this money is here, right? So you're able to do that. So you're able to leave back more money. M for the mortgage. We can make sure that your mortgage is paid out. What we do with our clients is, because everybody's not a homeowner. So if you're renting, we basically say, hey, fam, listen here. If you're renting, how much of a house would you like to make sure that your family has that's paid off, where they move into it with no note? Most people say $200,000-$300, whatever the case, $200,000-$300,000. Whatever you want to leave behind for your family, you're able to do it. You get what I'm saying? And then if you got the Bambinos, the E stands for education. Do you want to leave behind educational money for your babies to be able to go to college? And again, you may say, well, my babies ain't going to college. Guess what? You can leave that money behind. What if little Junebug is good with his hands and want to start a business? You get what I'm saying? You can leave that money behind for Junebug to be able to have some startup money to start a business in your honor when you're gone. For little Kiki to open up a salon in your honor when you're gone. So that's why we use the dime method, to make sure that you can calculate how much money you really want to leave behind. Your job don't care about that. They like, look at here, fam. You make this $30,000 a year, $35,000 a year. You better take this $105,000 and go on about your business, right? That's what it is. So that's why you have limited coverage, but we, with a personal policy, show you how you can have, as the song say, whatever you like, right? You can have whatever you like. Now, last thing I want to say with this, and this is the point I really want you to hone in on. So if you're out there listening, you're listening live, what I want you to do, pull the screen to your face, because I want you to get face to face, because this is going to be something serious, something to drop on you, right? So come in a little closer. I want you to get in a little closer, right? Come on. Let's get in here. Let's get in this nice tight space. What I want you to understand is, if your life insurance policy does not help you while you're alive, I'm not talking about cash value right now, but if something happens to you where you or your loved one or one of the ones that's covered has a heart attack, has a stroke, gets diagnosed with cancer, cannot perform 2 of the 6 activities of daily living. What do I mean? You can't get out of bed for yourself. You can't dress yourself. You can't feed yourself. You can't pay your bills. If you or your family member cannot do 2 out of the 6 activities of daily living, does your insurance policy say, hey, look at here, fam, you got a $500,000 policy? What we're going to do, because of the situation you're going through, we're sorry you're going through it, first of all, here's a check for $400,000. Tax-free, you don't have to pay it back. Does your life insurance policy do that? Does your employer-based policy do that? The answer is no. If something happened at the job, what you're doing, you're waiting for short-term disability to kick in, or long-term disability. And in between time, they're going to pass the hat around the job. Hey, y'all heard about Frank? Yeah, sad to see what happened to Frank. And again, then you're going to find out who rock with you at the job and who don't. Because again, they might pass that hat around, that joint might come back a little light. You get what I'm saying? But why would you leave the posterity of your family in the hands of strangers, on the charity of strangers? When there's a life insurance policy out there, where, as I told you earlier, we can customize it for you. You have a permanent policy that's building cash value, that you got access to that money. And you can also get a term policy where you get a lot of life insurance for a relatively low premium, and we can maximize that. So God forbid, if something happens, you got money coming in. Think about it. How many times have we shook our head when we hear about how tragedy strikes somebody that we know? How many times? Man, you heard about old Frank? Man, Frank had a heart attack. Oh, man, sorry to hear that. What's going on? Frank still have a life. Frank probably still have a mortgage, got car note and everything else. But guess what now? Frank ain't even, he can't do a thing about that. Frank now is fighting for his life. His wife, or whoever it is that's smitten, the loved ones are now scrambling to take care of the person to make sure they get healthy. And what happens to the household? The household fall by the wayside. And y'all probably like, man, he amped up tonight. Listen, I'm tired of seeing people going through situations because we hold on to an old mindset. I'm tired of that. I'm tired of seeing the hat being passed around and families being forced into poverty when there's an opportunity for them to actually make sure that they're taken care of well before it happens. Remember, at the beginning, I told you what insurance is designed to indemnify you, meaning if something happens, it makes whole. And when I tell you that we have policies where if you're diagnosed with a critical, a chronic, or a terminal injury, you get access to that death benefit while you're still alive. Meaning they cut you a check that is tax-free for you to get better and you don't have to pay it back. Think about it like this. If somebody's battling, whatever they're battling, how much do you think that's going to help that family not having to worry about, man, they finna come get my truck. They're going to put a the foreclosure notice on the house. Bobby got travel ball. He can't travel right now. You know, you got to go to work, you know what I'm saying? Because if you don't go to work, the light's going to get cut off. You get where I'm coming from? If you have to take off for FMLA, you're not getting paid for it. How much more beneficial would it be to have an insurance policy that kicks in like that? And so this is what I'll say as I close, because I done got hot now. Listen, I want you to understand this. For the cost of that policy, I tell everybody, get it, keep it. You can't beat that with a stick, right? You can't beat that with a stick, but don't let that be your only policy. That's all I'm saying. You can't beat getting $100,000 for cents on a dollar. You can't beat that. I'm telling you now, you can't beat that. But what I'm saying is, don't be like, well, I got insurance on the job, so I'm good. You're not good, fam. You're not good. Look at how much debt you have. Will your mortgage be paid off? If you're renting, you know you definitely need life insurance. Because God, what's going to happen to your family, bro? What's going to happen to your family, sis? If y'all have young children, watch this. I'm going to say this. I'm trying to quit. Hey, Miss Tansy, I see you. Hey, I can't wait to see you. I can't wait to see you. But listen to me. If you got young children, watch this now. Watch this. We have an insurance carrier that pays what I like to call child support. Yeah, I said support. Yeah. We have an insurance carrier that pays child support. What are you talking about, Hickman? If you have children that are under 18 and something happens to one of the parents, it's called the orphan benefit. And what that benefit does is it's going to pay up to $900 a month per child. Per child. And then it's going to give the guardian up to $450 a month per child until they turn 18. Let me walk off on that one, because I know y'all ain't never ever heard of that before. Y'all ain't heard that one before. We got a life insurance policy that pays child support. And watch this. That's not even talking about the death benefit. This is what they're going to pay out to this family to make sure that that family is taken care of. Yes, it will. Yes, it will. Imagine that, getting child support from an insurance company. In addition to that, if something happens to that family, then they're going to turn around and give them a scholarship. Hey, here you go. I think it's $3,000 a year, while they're $2,000 or $3,000 a year if they go to college. This is all from an insurance company. So I want you to know this. Insurance isn't what you think it is. There's a lot more to it. I know. I grew up seeing the insurance man. I grew up seeing them come. And I know I said mine. I grew up seeing the insurance man coming through. Grandma, you know, paying him. But then when something happens, it ain't hardly nothing. It ain't hardly worth a nickel worth of nothing, right? I grew up seeing that. But guess what? It doesn't mean you throw the baby out with the bathwater, folks. You've got to make sure that you find somebody that you can trust, that you can sit down, that will clearly articulate to you what it is and show you everything in black and white. Can I help y'all real quick? Let me tell you something. And I tell my clients this. Listen, let me show you what it is. Let me show you what this says. Look at here. Let's read a little bit. I don't want people to just take my word that, oh, yeah, this is the best policy for you. No. I want you to see and understand what policy is best for you. Why? Because at the end of the day, you got to make sure that you know what you have. When I ask people, yeah, what you have? Oh, man, man, they just take it out my check and, yeah. Well, when the last time you talked to your agent? Well, I think I seen him at Walmart and all this, that, and no. Oh, okay. Have your situation changed? Well, some situation have changed and so on. So I bought a new house or bought a this or bought a that. And you didn't increase your life insurance. Well, no, I still got, it's $30,000 worth of life insurance. But Chad's a good fellow. Chad gonna have your family messed off. Real talk. That's not what we do here. What we do, we are with you for life. And again, we're with you. And let me just say this, and I hope this resonates with you. We're here with you when things are good, but we come in the clutch when things are horrible. That's when we show up. That's when we're there to bear that burden. We're there to come in with some great news that, hey, look at him, though you may be going through. Hey, listen, we already processed this paperwork, so we should have some money coming to you here before long. You just worry about getting better, baby. Or in the extreme case that, again, listen, we sorry, we can't replace good old Frank, but guess what? This is that love letter from the great beyond, from Frank that he left for you. Here's the love letter right here. Here's the love letter. That's what we do. And so that's why we're so blessed to be in the Covington area. And then we have agents all over. We have agents down in Georgia, Lady Frida Martin down there in the Jessup, Georgia, Fort Stewart area. We got people everywhere that are able to help you get and make sure that your family is taken care of. But you've got to make the decision to have that conversation. And think about it. Insurance. Let me say this. Please, please, please repeat after me, wherever you are. Repeat after me. I'm doing like we do in church now, because that's how they make sure you get it, right? So touch your neighbor and say, repeat after him. Whole life insurance is trash. Turn to another neighbor and tell them, neighbor, oh neighbor, whole life insurance is trash. Yes, it is. And I'm going to tell you why. And I'm done for real this time. Whole life insurance, that cash value is not yours. You're paying for the policy. And in most cases, thank you so much, Tansy. I appreciate it. And I know you told somebody too. In most cases, matter of fact, in all cases, when you get a whole life policy, it's going to cost more than any other permanent policy out there. It is. And it's going to start building cash value. But if you go and get that cash value, you have to get it as a loan. So let's say, and I'm just using numbers here, let's say you have a $100,000 whole life policy and it has $20,000 cash value. It would seem as if that policy value is $120,000. Wrong. If you borrow that $20,000 and God forbid something happened and you don't pay it back before you pass, what's going to happen is if that person's passed, your family is only going to get $80,000. Yep. But wait a minute, Rod. The policy is $100,000 and there's $20,000 cash value in there. How in the world I'm only get $80,000? That's janky math. I don't care who you are. That's janky math. But that's how a whole life policy is set up. It's set up that way. And so we have a client right now down in South Florida. And when I tell you, he was working with one of our agents down there, one of our power couples, Richard and Lamisha Hughes. And they were showing him, hey, we have the Index Universal Life. It builds cash value. It's cheaper. We're getting you about the same amount of coverage, less money, blase, blase. He was like, but I done put into this, so I'm vested in this here. I said, well, look here, bro. If it's your money, go get it. That's what I want you to do. If it's your money, go get it. And he was like, Well, what you mean? I say, well, it's your money, right? You got cash value, right? Go get it. So he called the carrier. And I'm going to give you a long story short. And taking out the sentence enhancers that he had and that he used, do you not know they basically told him, if we give you your money, we're going to put a penalty on it and we're going to tax it. We're going to put our fees on it. But I thought it was your money. We have what's called an index universal life policy. Same scenario, $100,000 policy, $20,000 in cash value. If you take that cash value and pass it, you don't even have to pay it back. Your family get that $100,000. This is the kind of stuff that we educate people on. And guess what? It's cheaper than a whole life policy. And what I do with our clients, I sit down and show them. Because again, people lie, numbers don't. People lie, numbers don't. We want you to be informed about what you have. And so I started all this telling you why, again, keep your employer. Listen, keep it. I'm telling you, keep it. Because it's, again, a lot of insurance for the low. But please, folks, get you a personal policy as well. You've got to get a personal policy. If you don't get a personal policy, then basically all you have is death insurance. And you're literally waiting around until you pass. And here's something that is so sad, but I want you to think about it. When people don't feel valued, as if they're bringing value, and if people feel like I'm bringing my family down, don't you know that crushes someone's will to live? When especially, let's talk about a man. Now, and again, I know women too, but let's talk about a man. When you have a man who has provided for his family, has provided for his children, has been that one. When you have a man that gets down because life happens, heart attack, stroke, get sick, whatever the case may be, and he cannot provide for his family, and he starts seeing his family going, down the way, and his wife like, well, baby, we can't do this and da. Don't you know that crushes that person's will to live? It crushes their will to live because they don't want to be seen as a burden. But this is where the living benefits that we offer comes into play. Because again, we're saying, hey, bro, don't worry about money, get better. Don't you worry about no money, fam. Your family is taken care of, bro. You just get better. That's what we're able to do. And don't you know, when people don't have to worry about money, life gets better. When people don't have, oh man, my family, this, that. When they don't have to say, the only way I could be a benefit to my family is to die, they'll live. They will live. And so that's why I take this, what we do, to heart. That's why I get so emotional about it. That's why I get so amped up and animated, because we're helping people end poverty. We're helping families be able to say that, God forbid, if anything should happen, we're going to be all right. Right now, people are scared to death. Scared to death because they're like, I don't know if something's going to happen and what we going to do if something happens. Scared to death. But again, there's life insurance out there. Notice what I'm saying. Life insurance, not death insurance, because it insures your life. It makes sure that you can get back to it, and it pays out while you're still alive. All right, listen, y'all. Listen, thank y'all for getting on. I appreciate those of you that liked and shared and commented. I appreciate you so much. Listen, let people know. Let's stop our community from going through this foolishness. Let's stop. It's got to end somewhere. So challenge your friends. Bring it up when you're going to have mimosas. Bring it up to people. So listen, thank you so much for joining on. Now listen, I'm out of town this coming week. Listen, Generational Wealth Builder, we're shutting down. We will be in Vegas, baby. I'm going to be there for our annual convention. We have some tremendous speakers there. Going to be there. We're going to have Will Gudara, famous restaurateur and author. We're going to have Charlie Cook, great journalist from the conservative nature. Again, I follow a lot of his stuff. Love to see how he goes around and really challenges some of this thinking that's out there these days and time. Our CEO, Mr. Patrick Bet-David, going to be out there, and with the litany of other agents. And so we're all descending down in the MGM Grand Arena. I'm going to have a good time. So I'll be out of pocket. But again, you can always inbox me, and I'll definitely get back in touch with you. We'll set up a schedule. And all right, I see you, Tansy. I see you. We're gonna have coffee while we do it. We're gonna go get a coffee, and we're gonna have a good time. But either way, love you all so much. Have a wonderful night, and we'll see you on the next time. Take care, and God bless. All right. Bye-bye. Bye-bye.